And actually, our next guest is coming in. It's good to have him on the show today. Amit Jeswani, founder and CIO at Stallion Asset, and of course they run their fund where the asset size is it's crossed over 800 crores. Good to have you on the show. I was going through the portfolio holdings, and what really struck me was that you seem to have a cautious view on that one part of the market that's completely blown up. And I'm talking about the PSU space, right? So explain to us the thought, the rationale, and how you feel right now. I mean, whether you're still sticking to that theory, given what the market has been doing with PSU stocks. A lot of people are talking about a complete re-rating and a new era and whatnot.
And thank you so much for having me on your show. Surbhi, we've missed out on that rally. We now feel FOMO'd because we've missed out on that part of the rally. We didn't invest in PSUs for 10 years. And that was okay by not investing in PSU. That didn't have any impact on performance. But now we couldn't have imagined this kind of melt up. There was no pattern and framework which could have said that you will see PSUs doing what they have done. It's just amazing what they've done. And as they say, the grapes are sour on the other side. So it's sour grapes for us.
No, Amit, actually, on a lighter note, the signal came from no less than Prime Minister Modi. Who, if you remember, said PSU.
That was like 1-2 weeks.
Clarion call, if you remember. I know, and I'm just joking. But are you changing your view, the way to look at things there on the PSU side? Because a lot of, I mean, if the government is going to be a big driver of capex, just 1 minute, Amit, I'll just come to you. I think I'm just waiting. We're just half a point away from 20,000.
There we go.
So I just want to say we hit 20,000 and I'll come to you. So we're almost there. Got to less than within 1 point.
It's happened, Prashant. 20,000 on the Nifty.
Yeah.
We can finally say it after a wait of 50 plus sessions. We've traversed the distance, traversed the journey, and the 20,000 mark, the next decade, the 20,000 decade is here.
So we're at 20,000. We hit 20,001. So the high is 20,002 actually. So there you go. 20,000 finally there. It's from the 19s you've moved to the 20s. I think, I guess. So let's hope we stay there now and don't fall back into the 90s.
And the last leg has come, the contribution has come in from the FMCG names.
Yeah.
They were the ones which were a bit left out in this rally because consumer demand has been a bit muted, plus valuations were on the higher side.
Yeah.
But pull up an ITC, pull up a Nestle. These are stocks which are doing quite well. And of course, banks are contributing. So ICICI Bank has seen quite the up move in the last few minutes. So 20,000 is here for the first time.
And I think this rally is going to be remembered for new leadership, because till now it was IT and it was banks. And that was always the narrative.
Every time consumer, right?
Consumer. Every time that we were covering these 1,000-point distances, it was one of these big areas. This time, banks were dragging their feet for the longest time ever.
Yep.
IT was in the doldrums, but then IT stocks, I mean, fundamentals, and we'll get to that as we get quarterly earnings. But IT stocks decided to, take a leap of faith. And then the sector that we've been discussing, PSUs, I mean, railway, defense. I don't remember in the last so many years of my stock market reporting that we thought that it would be these sectors that will really lead the next leg of the move.
Absolutely. I mean, so it's been quite incredible in the broader market, the action that we've seen, and newer kind of stocks and sectors have come to the fore, and they've kind of contributed to this rally. And by the way, I have to say, Surbhi was talking about IT. Large cap IT is still, in a way, kind of an underperformer. Mid cap IT has done very well, but large cap IT is still an underperformer, and banks have not really done all that much in the last. I mean, actually, in the last couple of months, banks are still lagging. So this rally is largely come on the back of, so as to speak, hard assets, right? I mean, old economy names which have done very well for the Nifty. So that the point I'm making is, if IT and banks were to start to participate, large cap IT and banks were to start to participate in a big way, I mean, you perhaps have got more to go here. And I think, as Rima was pointing out, the rally in broader markets began on the 31st of March, and the broader markets have done almost double of what the Nifty has done. There you have it. But anyway, we are at 20,000, and let's get a flavor of what's going on in the newsroom as well. Nigel? What's happening?
That's right. I mean, it's a lot of commotion over here. Everyone's quite excited that we are seeing this 20,000 odd mark. So We waited for it, and I think the start of September itself, the markets were lightly poised. And after August, what a big comeback we have seen out there. 20,000, we've been counting down to this level, and the Nifty goes ahead, kisses it, and we're still holding closer to those levels. So fabulous, fabulous run is what we were saying. And as I told you earlier, only 52 sessions is what it took for us to get out here. The previous run, that is 18 to 19,000, was 425 sessions. So this, in that sense, was a good run, right, guys?
Absolutely, and I think some of the points that Nimesh and Prashant were making earlier, that we're at 20,000, yet if you look at fundamental or momentum indicators right now, whether you look at valuations, you look at how we are placed today versus the historic averages, we haven't crossed levels that we saw during the previous bull runs, and perhaps that is what is giving market participants some amount of confidence that this has more legs. Let's ask Amit that question, actually. Amit, what do you think? 20,000, does this look like the beginning of a bull market, the middle or the end? Where are we on the cycle?
On the large caps, I would say this is the start of a bull market. On mid caps and small caps, you've already reached 60% of the bull market, or 70-80% of the bull market leg. But the next decade, regardless of small cap, mid cap, large cap, companies which grow at 20-30% will make it very, very, very. These are times to dream very, very large for investors.
Amit, would you consider investing in PSU stocks? I know you've missed out on the rally up until now, but from here on, would you even consider investing in them across the board, whether it's in banks, PSU banks, or the railway, or the defense capex, any of these themes?
So Rima, actually market is moving in 18-20 month cycles. The last 18 months has been about PSU. Started with Adani, like B2G kind of counters. If you remember, pre-COVID, from COVID levels to October 2021, it was about chemicals, pharma, and technology. And after that 18-month period, these guys went through massive corrections. Like most of your chemical stocks are down 30-40%. Most of your tech stocks corrected 30-40%. Some have now bounced back, of course. The same happened, if you think about it, between 2018 and 19. You had quality stocks which were moving higher for 18-20 months, and they all moved as a pack. And then they underperform, like HDFC Bank, Kotak Bank, you know what I'm saying? The same happened in 2016-17 with the NBFC pack. The entire pack rallied together, and then they go through a very large underperformance cycle. So we are in late stage in the PSU rally. This rally is old. We just pray to God that we'll be able to catch the next leader, the next sector. The entire sector will make new heights. The entire sector will have large earning growth expectations, and you want to make it large the next rally. We've missed out PSUs. We're too late to the party. And our alphas are still very decent. This year, our alphas are 20% plus, so we don't have to go there.
So if you had to bet on the possible, 2 or 3 themes which could drive the next upcycle of 18 to 20 months, which ones would you bet on?
So Rima, the entire change of profitability is happening in your consumer tech company. We can go wrong, but I believe Zomato, Policybazaar, Paytm, these are not recommendations. We are a SEBI registered PMS and a research analyst company. These are not recommendations. We might have vested interest, but companies like Paytm, Policybazaar, Zomato, they are all going to post profits. The J-curve, and they are all neglected territory stocks. It's got loss to profit as a framework. When the entire sector moves from loss to profit, typically you end up making a fortune. So that would be the first sector that I would say there's a possibility. Second, after 7-8 years, you're seeing auto stocks making a comeback. You've seen the auto index make a lifetime high 5 years. And then you've got leaders there. You've got leaders like TVS Motor, who's gaining market share every year. You've got Uno Minda in the auto ancillary part. So you've got... let's see, I don't think auto will be the biggest leader because it has to start with lower valuation. New age tech, I believe, can make it very, very large if they get it right. Of course, you have to track execution here, and we can also go wrong here.